Unless you've been asleep for the past few months, you probably know that cryptocurrency has been a new hot thing when it comes to investing. Cryptos such as Bitcoin and Dogecoin are quickly going up in value. In fact, Dogecoin, according to many articles, has actually produced some millionaires and in some cases has caused a lot of people to make a lot of money in a short span of time. This has caused a lot of people to jump into the crypto market and just start investing in general, but the problem is that a lot of people don't actually know the fundamentals of investing in crypto, exactly what type of asset class is crypto, and how do you actually invest in it in a safe way so you don't lose everything, but you can still stand to gain something. Now, some people are saying that you should hop into the crypto world so that you can get rich quick. I think on some level, a lot of us know that that's not necessarily safe. But on the other extreme, you have people saying that you shouldn't invest at all and you should just stick to stocks and real estate. Well, if you do that, you could be potentially missing out on some chances to make a lot of money in a quick amount of time. So should you get involved or should you not? Well, the answer is in between, and we're going to break that down in this video. There's a proven way that you can invest in crypto without standing to risk everything you have, while at the same time cutting you a nice slice of that market share while it's hot. So let's get into it. Hello everyone, this is Elijah with Financial Anatomy, the place where we help you take control of your financial destiny. We talk about personal finance, side hustles, and investing on this channel, and we're going to be talking about cryptocurrency in this video. Many people are starting to hop into the crypto market and they're buying Bitcoin, Dogecoin, and other cryptocurrencies in hopes that it shoots up in value and they make a bunch of money in the least amount of time. The problem is these new waves of investors don't necessarily know what they're doing, so they're not really investors. They are gamblers. And we've seen some pretty high sides of both extremes. For instance, according to CNBC, a 33-year-old invested his whole life savings into a meme cryptocurrency with inspiration from Elon Musk, and he became a Dogecoin millionaire. Another example, which goes to the opposite side of the spectrum, is from CNN Business. When Bitcoin crashed, this man lost his savings when cryptocurrency plunged in 2018. So it's safe to assume that cryptocurrency is actually making some millionaires, but it's also making a lot of people broke. And if we're gonna be honest, I'm sure everyone wants to be a millionaire, but they may not want to risk the other side of extreme, which is you going broke. So what's the happy median, and what is the most efficient way to invest in cryptocurrency? This is pretty important to take in consideration because when someone asks me if I'm going to invest all my money into cryptocurrency, Bitcoin, Dogecoin, Ethereum, or whatever the hot cryptocurrency is at the moment, well, this is pretty much my response.
So let me understand it. I go in your casino, take a third stake along with your organization in the Corellis, then I let you guys manage my investment for me?
Bingo.
Yeah, you must really think my mother, God rest her soul, fucked an idiot instead of my father. Are you calling my mother an idiot who goes with morons?
All joking aside, anytime that you're investing, you need to learn the difference between investing and speculation. Now, what is speculation? The dictionary, according to Google, defines speculation in this context as investing in stocks, property, or other ventures in hope of a gain, but with the risk of loss. Now, how does that necessarily differ from investing? It differs from investing because investing has proven systems, proven strategies, proven tactics that have actually stood the test of time, and they're still relevant and still working today. So the risk is extremely low when it comes to investing versus speculation. The risk is often greater, but the potential gain is also greater too. Now, when we look at cryptocurrency, which one of those two does it fit in? Does it fit in investing or does it fit in speculation? Well, we have to look at the track record of cryptocurrency and measure it to the other major markets when it comes to asset classes. Both the stock market and the real estate market, for examples, have both gone up, crashed, gone up, crashed, gone up, crashed, and they've stood the test of time because they are still here. And there are tactics, systems, and strategies to see the cycles of those markets, invest at certain times to maximize your income, or you can just do dollar cost averaging when it comes to stocks and just invest on a consistent basis, have dividends reinvested, and overall you end up coming out on top because that's a system in itself. When we look at cryptocurrency, it hasn't been around long enough to necessarily justify it as an investment, even if you are learning trading systems on how to make some quick money. So does that mean we should run away from all the cryptocurrencies, like no Bitcoin, no Dogecoin, no Ethereum, no Litecoin, nothing? Well, no. We're going to take a page out of Benjamin Graham's book, The Intelligent Investor, which is quickly becoming kind of like the Bible for modern investors, where he talks about speculation and investing. In Benjamin's book, he mentions that you need to be able to tell the difference between speculation and investing, but only a fool would not recognize the value of speculation, the gains that it can offer, and he straight up said that all of us to some degree are going to speculate. What you need to do is just manage your speculating versus your investments so that you can keep a good balance. So what is a good balance? According to Benjamin Graham, you want to have an assessment of your total asset value. And once you have an assessment of that asset value, you want to take no more than 10% of that asset value in terms of money and how much that is worth. And you use that to put in investments which are considered speculative. And when we're talking about assets, we're strictly talking about assets in the investment category. So something that increases your net worth, like let's say a car, we're not going to count that because you don't really know the true value of that car until you sell it. We're talking about stocks, bonds, real estate. We're talking about assets that fit the investment category. Now, if you need a means of coming up with what is your total asset value, I recommend that you download the Financial Anatomy monthly budgeting template, where it shows you the asset value based on what you put in, and then you can use that number to figure out what is your 10% that you can spend on speculations if you want to do this the right way. The link is in the description, also in the pinned comment. So bringing it back home, we're going to take a look at an example. Let's take a look at someone, let's say John, and his total asset value is $10,000 across his stocks, his bonds, and his real estate. It all comes out to be $10,000. So the total amount that he can spend on speculative ventures, if he wants to stay within this balance, is going to be $1,000, because $1,000 is 10% of that $10,000. So based on our definition, since cryptocurrencies are speculative, that means that he would have $1,000 to spend in the speculative ventures, which in this case could be Bitcoin, Dogecoin, Litecoin, etc. If at any point John wants to invest more into the cryptocurrencies, then he needs to increase his total asset value so that he can invest more into the speculation and stay within that 90-10 balance. Benjamin Graham in his book, The Intelligent Investor, also mentions that you want to make sure that you have a speculative account and an account for investments. So myself, as an example, all my investments, where I do the dollar cost averaging strategy, is held in my M1 Finance brokerage account. But when I buy cryptos, since that's speculation, I do all my crypto buying in my Webull account. So in summary, this is the best way that you can cut yourself a nice little slice of that market share when it comes to crypto without necessarily risking losing a lot of money, because your asset value is mostly in safe and secure investments. Meanwhile, your speculation is in a separate portfolio, and that's money that you could actually afford to lose. But let's say if you do get triple your investment, hey, that's great. This is the strategy that I employ, and I recommend that you employ too, because many wealthy people employ this strategy. The only difference is we see them putting a bunch of money into something that's speculative. Well, guess what? That still probably fits within their 10% range when we measure it to all the other stuff that they own. So if you want to invest more while staying in that balance, then that means you need to increase your total asset value. My recommendation is to make your investments as autonomous as possible, and I've given advice on how to do that with the stock market in this video. So if you're wondering exactly how to do that, you can always check this video out for greater detail. But the sum of it is I have automatic deposits that go into M1 Finance every single month. So my portfolio keeps getting bigger and bigger and bigger in terms of how much money I'm putting into it. And any dividends that I get are automatically reinvested. So the value of that portfolio keeps growing. So by default, the amount I can invest in speculative ventures just keeps increasing, and I can stay within that 90-10 rule because my asset value keeps increasing. This is the most efficient way to invest in cryptocurrency. Instead of putting more than 10% money in, And if you do lose it all, it kind of stings. While at the same time, you can maximize your chances of getting triple or 4 times the return, because at this particular point in its development, Bitcoin is speculative. It's not really an investment. So you need to treat it like speculation. And if you do so, then you'll be all right. And regardless if you make money or if you lose money, overall, you'll be okay. That does it for this video. If you have any questions or comments, feel free to leave them below, as well as subscribe if you're new. Hit that bell notification if you want to be notified when I come out with another video specifically on cryptocurrency. Give this video a thumbs up if you found value in it. And again, if you want to be able to find out what is your total asset value, you can always get the free Financial Anatomy budgeting template, which will show you what is your total asset value based on the numbers that you punch in. It's been Elijah with Financial Anatomy. I'll catch you in the next video. Don't forget to get out there and take control of your financial destiny.